Bitcoin is in the critical zone. Hi, and welcome to Landy's Crypto Quarter. I am Dr. Crypto Landy. Today, we are going to be taking a look at Bitcoin spot price action here on the daily. Today is, of course, February 17th, 2023. Now, we're going to take a look at Bitcoin spot price on the daily, but more importantly, we're going to take a look at Bitcoin spot price on the weekly and define some criteria for further upside and take a look at some potential breakdown areas as well. So right here on the daily, we can see that after the fairly large wick to the top side here on the 16th, we then recovered quite well on the 17th. So we had a dump off below after this very nice move up off the lows here. And we closed below the first standard deviation here on the upside or the strong half of our Bollinger Bands. Now, if you haven't seen Bollinger Bands like this is very simple. This is just the 20 simple in the midline. We've got the white Bollinger Band is the first standard deviation, the teal is the second standard deviation, and the blue is the third standard deviation. So after the run from the lower end or weaker half of the Bollinger Bands here on the daily, we ran right to the top side and then touched off at the just above the third standard deviation Bollinger Band up there. Got quite a hefty rejection intraday that resulted in the daily closing below the first standard deviation, and then Bitcoin immediately recovered on the Friday candle. So where does that leave Bitcoin right now? Well, when I say that Bitcoin is in the critical zone, that critical zone actually comes from the weekly here. So we'll take a look at this. On the weekly, we are in the critical zone around the highs. Now, the main condition for continuation to the upside, and that's what we're going to be looking at today, is what conditions need to be met for continuation to the upside, and what conditions would be need to be met for conditions to start looking at a potential breakdown and or a larger retrace back to the lows, and then possibly open up the door for lower. So here on the weekly, we can see that we're nearly breaking out of the highs here. We have so far wicked above the highs, and in this case, the highs coming in at 25,214. Spot price action got up to a high of 25,256. So far, intra-week, we have swung the highs. So this Sunday's closure is going to be very, very important for Bitcoin. If Bitcoin can close above those highs, we can then substantially raise daily targets up to the next level. And in this case, I would say probably around the $27,000 to $28,000 region, just above the weekly wick highs here. So this will update, and I kind of projecting a little bit out the third standard deviation. If we do close above the second standard deviation here at 24,757, I would expect them to expand a little bit more to the upside. Either way, anywhere above the first standard deviation, we're going to see expansion to the upside. And in this case, that's going to update the Bollinger Bands at the weekly close, which is probably going to push that third standard deviation wick area, which is where things kind of wick off of the third standard deviation. It's very rare that we see closures when the Bollinger Bands are this spread apart. And it's actually pretty rare to see closures outside of that third standard deviation on the weekly anyway. But in this case, it's kind of like where wicks tend to come in. And then you wait for the next weekly closure to take a look at what that updates to. And then we can see what continuation looks like. In this case, it's probably going to be around that $28,000 region. And I would take things in about $2,000 chunks. Right now, Bitcoin trading at 24, so $24,000 to $26,000 is kind of the area of interest intra-week. And then above 26, it's 26 to 28, 28 to 30, so on and so forth. $2,000 chunks is the way that I like to look at things. And in this case, if Bitcoin can break out and close above that 25,214.57 in this case on the weekly, I would be extending targets up to the next area here on the weekly, and that's going to be 26,555. And then we can start looking at, yes, there's wicks in here, but the main area up on the weekly is 29,447, around $30,000. So this breakdown candle, if this breakdown candle on the weekly here, which broke down, it basically, this is our candle closure on the weekly that broke down out of this range here, which was a little bit of a daily redistribution. And in this case, very close to where we just wicked. In fact, it is right about, we should actually throw a horizontal on here instead so that we can get a price target there. So this would be 25,338. We recover that intraday, probably looking at, another leg up to around that 26,555 from the weekly perspective. So now this is going to be fairly interesting when looking at the weekly here, because if we see a closure above the close open over here of the highs of this particular range, where we have already tested around in the previous weekly high here, and also note structure, we have higher low structure on the weekly now if this weekly can close above the current wick highs. So we've got a higher low down here, and then we would have a higher low here, and we've got a complete trend in this case. So higher low, higher high, higher low, and then this could only become a higher high, of course, if it closes above around 24,350 or so. If it does that, then I would extend targets in and around this upper area above the second standard deviation here on the weekly. So if we look at where the second standard deviation is, we can see that is, we've already wicked above it. That is sitting at 24,760. Above 24,760, this begins to trend on the weekly again to the upside. And I would then, start looking at that 26.5 area to around, 28,000, and then possibly 28,000 to 30,000. I do think that is probably going to be a good stopping place for Bitcoin for a little while, at least from the daily perspective, if it does get there on the daily. And then we kind of evaluate things from there. When looking at things on the daily here, we do have, not only a nice recovery in the Friday candle here, but we do have the area to the upside to beat is the second standard deviation to the upside at 24,811. If we do start seeing dailies over this weekend close up there, you can extend targets to around that 25,700 area in between the second standard deviation and the third standard deviation to the upside here. Now, breakdown. Well, that would be putting in a high on the daily. So anything below our wick low here, and that's going to be 23,344. That would put in a high, and I would expect things to run back to the downside lows here. And that's actually going to have some implications for some higher term timeframes. And we'll take a look at that really quickly here and come up with some criteria. So basically above 25,214, I do think that we're going to be testing things up further. And the shorter term timeframes, the daily and under, around that upper $25,000 region, around 25,700, 800 to possibly 26,500. To the downside, if we do start seeing things break down anywhere below 23,500 on the lower term timeframes, we'll take a look here. But you can see the daily area to be aware of here is the first standard deviation to the downside here, which is 23,912. That is the same as it was yesterday. So if you watched yesterday's video, this is going to be the same area. If we do see things close below basically $24,000, we're probably going to test around 23.5. And if we do test 23.5, that does, well, put into play the 23,350 area. So that's the area to stay above, 23,350. As long as things are above there, looking pretty good. So let's go ahead and take a look at some lower term time frames. Yeah, we can go here. Let's look at the daily actually momentum here. We can see the BBWP is expanding to the upside here. So that's Bollinger Band with percentile. And that is because we are above the first standard deviation, pushing up against the second standard deviation to the upside here. So we are seeing continued expansion. The 20 simple has an upward slope. We can see that Stochastic momentum is also pointed up. So, pressure remains to the upside from the daily here. We can see that the momentum pivot on the daily is going to be 21,900 or so. Below there, obviously things have already broken down, and that would turn the momentum pivot down. But if things did stop along the way, got a nice bounce above there, as long as Stochastic is pointed up, this is looking pretty good. And as long as we are seeing expansion without confirmed mean reversion. What is confirmed mean reversion? That would be, in this case, Bitcoin falling below the first standard deviation towards the 20 simple, which is at $23,000. So basically, below 23,900 or $24,000, we start seeing BBWP cool down. And the closer that we get to the basis, or the 20 simple in this case here, we would see that, we would see this start to fall pretty quickly. Now, if we did lose around that $23,000 to the downside, then we are looking for around that 22,100 area, which is the first standard deviation to the downside here, all the way to the second standard deviation. So we're kind of sideways with the band here, only slightly pointing up with the 20 simple. So it does provide for a possible range scenario, and we can come back to it after that. When looking at the 12-hour here, we can see that the 12-hour is pushing in and around this current high. So let's see here. The close came in here at 23,557, and the close up here 24,577 is the close. The previous close high was 24,571. So there is the potential here. We'll look at Bollinger Bands in just a second, but on the 12-hour, I did want to note this because there is the potential for bearish divergence to form here. If Bitcoin doesn't push through the local wick high here on the 12-hour, which is going to be that 25,256, and get a close above it, and even if it does, the potential for bearish divergence is going to keep building on this 12-hour. So 12-hour, obviously, I'm watching that as a preview for what's going to be happening in the daily. And in this case, the RSI read here is going to be a 74. So it would need to, we can project price basically for where price would need to be to avoid a bearish divergence. So we can call it the 75 read. I'll pull down the critical zone here. And a 75 read would be 26,210. So again, that testing around that 26.5, if a 12-hour does get up there and close before putting in a high, that would avoid a bearish divergence. Anything below there, even if it's a higher high and we still have decent structure, just know that bearish divergence will be building in the local trend. So the local trend is also going to be, I can define the local trend for you, and that's just going to be this uptrend from this low here. And we can turn that off, get rid of the drawings here. And the local trend would be, this here, which would be higher low structure. So you can see that 26,000 is also the third standard deviation to the upside here on the Bollinger Bands. So if it did something like this, it would still get bearish divergence, but because it is breaking, for closing 12 hours up there, it's very likely if it doesn't get rejected intraday, we close a daily up there, we're very close to the Sunday close. So if the Sunday close did close above the local range, we would still be looking up with lower term time frame back tests of the breakout region. If we do see, of course, anything below the first standard deviation to the downside here, this is 23,765, then we would start to look back down to around that $22,000 area, this midline down here. And of course, that would be a structural change. That would be a break of structure below this low here. And in this case, this would be anything passing the first standard deviation. It has to bounce basically at 23,344. So basically 23,350. Things need to bounce. If we do see, $24,000 lost, that was the daily first standard deviation. So, or 23,900, 24K is basically in the same area. When looking at momentum, you can also see where the momentum pivot currently is, and we are trading below it currently, and that's 24,677. And if this next 12 hour does close under there, we would get an initial cross to the downside. So for this next 12-hour period, 24,677 is going to be the number to watch. And subsequently, that number will update to where the highs are. So closer to $25,000. In fact, this last wick on the 12-hour here came in at 25,025. So if you do see a momentum indicator like the Stoke turn down, that's what we're going to be looking at. So we're going to be looking at the momentum pivot now being that high that needs to get broken. The 8-hour, same thing. Now, of course, as we go down the time frames, the first standard deviation is going to be much higher. If we close below the first standard deviation, 24,114, we will, subsequently see a test towards those lows. And you can see the 8-hour is pointed down on momentum here, with the momentum pivot being 25,150. And if it does put in a lower high here, of course, it will avoid divergence. So the best thing for bulls right now is to go sideways and up. The 6-hour, we're looking at potential cross back to the upside on momentum here. Lots of bearish divergence potential here, all the way up to 27,150, in fact. So just be aware of that. I don't think this is going to be a quick move. We got to look to that weekly to see if we actually break out of those range highs. One of the big reasons why Bitcoin's in such a critical area. Need to see the weekly close above the range highs. If it doesn't, we're probably looking for downside in the coming week. And the 4-hour here has recovered. Nice move up, and it is not yet, it's actually finding the first standard deviation to the upside as resistance on the 4-hour time frame here. So in this case, you can see why that 23,912 area from the daily is so important. So if we just kind of call this out here, the 4-hour below $24,000 is going to start to look like we are going to head down. And this would be, close below $24,000 and then subsequently drop this low here at 23,350. Then we're probably going to come down here and test, guess what? $23,000. Now let's flip back to the daily and take a look at where the important areas are. And this is how the 4-hour lines up with the daily. We've got the 4-hour close below the 20 simple that would be 23,900 area. That then would be getting below the first standard deviation on the daily, and then heading down to test the wick low area. You could move that up to the closes as well, and that's the 23.5 area. If we lose 23.5, I do not only think that we're going to go test the wick lows, I actually think we're going to go test the daily 20 simple, which is at $23,000. Now the 4-hour, and this is very, very, very important, the 4-hour first standard deviation to the downside is the daily 20 simple. If we start to close under there, we will see expansion of the Bollinger Bands to the downside, or volatility expansion to the downside. So in this case, we would see something like this on our volatility meter or metric, where we would come down and then re-expand, because closing below the first standard deviation would, crossing the 20 would start to cool things down, and then back above or back below hold on a second here. Back below the first standard deviation to the downside would then turn the BBWP indicator to the upside. So something to watch in the coming days here. So the Saturday candle and then into the Sunday candle. That's going to kind of be it for me on my take for Bitcoin in this very, very critical area. Again, it's got to break out above the range highs on the weekly here, and that's 25 to 215 or 214. Still got to beat out the local weekly wick high as well. And again, anything closing above the previous high, any closes higher than that area, we do need to understand that if it does not beat the wick highs and starts to mean revert, there's also going to be a good setup for the bearish divergence here to start playing out with another drive on the weekly. So if we don't close above that area, bear div is going to be, this would be a continuation drive. So need to close above that wick high. That's kind of all I've got for Bitcoin spot price action. Let's glance at CME and wrap this thing up real quick here. CME did close on the daily. The CME did close at 24,870. So it did close above the $10 above the second standard deviation, which is going to basically define the criteria for running that high around 25,690. Still, again, here on CME, you can see that's going to be the weekly range highs is at 25,270. It's also the weekly wick that needs to be beaten out. There's no way that the weekly is going to close up there, as the weekly already closed. But it's probably going to get tested again if Bitcoin spot price action doesn't fall apart on the weekend. And in this case, closed above the we closed above the candle bodies here, which gives us the targets of the wicks, and then up to the next area. So we can still swing fail the wick area on the weekly, but it also gives us the next target area being the open of the 13th of June candle. And that's also going to line up with the third standard deviation to the upside here. So pretty important stuff this weekend coming into the Sunday open. For those of you that don't know, CME opens on Sunday. So it's going to be when the weekly closes for Bitcoin on Sunday. CME will open with the new weekly candle on Bitcoin. So keep that marked on your calendar. I do think that this is going to be a very important week moving forward. We do see that CME here is pressure up on any closures above 21,761. So even if things do fail to break out in this next week, I do think it's more likely that we'll see things range a bit more, and then we kind of gauge breakouts from there. So that's going to do it for me. I want to thank you for joining me. You have a good morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out.